Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
This is the better than any tennis final you'll ever watch. I'm Bruce Whitfield. This is Share Shootout here on CNBC Africa. First with Business Worldwide. The Williams brothers go head-to-head in a battle. Lance and Roger both gave us two of their share picks earlier. Lance, Invicta and Santam. Roger shot them both down, tentatively on Santam. He likes Santam as a business. Historically, an awesome dividend payer. Historically, but markets are uncertain. We know that if the JSE loses value, the underlying assets of Santam could get battered. South African consumers come under pressure, businesses come under pressure, they start shopping around for insurance. So that is a risk for Santam, which has been a very strong performer historically. Roger, with ILIAD Africa, a big bet on a turnaround in the fact that you don't like your tiles anymore and maybe you'll go and change them and maybe get some new taps at a high margin. But will enough people do that? Certainly Lance doesn't think so. And he's not a big fan of RMB Holdings. Why? Because it's got the asset of First Rand down 15% or so in the last month. Standard Bank says Lance has got a far better opportunity in a rising interest rate environment because of the endowment effect. It's got decent capital. It will get more interest off its capital as a result of that. Plus, of course, it's got an Africa expansion strategy, which First Rand is still trying to find its feet on. So let's go into the final part of the show. Because we were nice to you in the first part, Lance, we're going to be mean to you in the second part and make you go first. 30 seconds on Spar.
Spar is a wholesaler to its store base of owner-managed convenience stores, 800 Spar stores, 500 top liquor stores, and 250 build-it stores. It's got strong opportunities to expand in the lower income segment. It recently released its interim results, which were slightly disappointing. Spar and Tops grew strongly, but build-it was under a bit of pressure. I think the share price has been too negatively affected and it's got a good return on capital.
And that's where you have to stop, because I told you we're being mean. You can't say no to Spar, surely.
I can't, it's the last one.
Precisely, so you can't say no to Spar. Would you, under ordinary circumstances, balk a little at Spar, or do you like it?
Listen, I think of the three he's chosen, I like Spar the most. I think it's defensive.
You hate it least, yes.
I hate it least.
Okay.
It's defensive. If food inflation goes up, it will benefit from that. The valuation is not as rich as it was. I think it's kind of a fair price. I think it's priced to yield.
It's trading on an historical multiple of 17 times, which in the retail space is almost giving it away.
Yeah, it's a gift. It's a practical gift. And my only negative is really there may be a shake-up. Let's say there's a severe downturn. Your costs are going up, particularly rentals and electricity.
Electricity, fuel, transport, getting boxes of Sally Williams nougat, for example, from the depot to each one of the Spar stores is increasingly expensive.
Yeah, and so they may have some residual liabilities on some of their stores. Let's say some of the stores go bankrupt. They could lose there.
They've been quite clever with that, though, because they have taken a number of stores into the corporate fold, and they've closed a couple. They've opened a couple of new ones. They're very proactive, aren't they, Lance, when it comes to dealing with recalcitrant landlords and members of the Spar network?
Yeah, they are. They keep the franchise strong, and as you say, they manage the float, so to say, with the corporate stores, where they take those back into ownership, fix them, close them, sell them. One of those three options.
Wayne Hook keeps promising that he's going to get the fresh lines sorted out in Spar. If there's a weakness in Spar, it's those fresh lines. They suck.
Yes. The Woolies lead in that space. I think it's a strong focus of theirs. I think they can get it right. The management have a very strong record. They understand their space very well. They understand retail well. They've had traditionally the best like-for-like sales growth, which is a true mark of success in the retail space. I think it's very defensive in this space because of the nature of the product they sell. If there is a downturn, they are not the most expensive. They're not selling into the top market. So I see it as...
And their convenience. I mean, convenience is their strongest point. If you want to go to a big supermarket, well, you'll go get in your car, drive, spend half a day filling a trolley. You want stuff quickly, you pop it to your local Spar, boom, 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 you're done. You're paying a premium, but that's where the profit margin is. You have to, therefore, accept it, Roger. You have no blooming choice. So you accept it
I accept it
willingly.
Well, it's the best of the three. I'm happy with it.
Okay, the least offensive of the three. There we go. Is that the nicest thing he's ever said to you, Lance?
No, I think when I was young, he said something nicer.
There was another time.
Yeah.
Okay,
You're
Roger.
a good brother or something like that.
Yeah, as he was standing on your head, probably. Okay, Roger, your final pick. And I'm wondering whether or not Lance is not overplayed his hand on this one. Grand Parade Investments, in 30 seconds, please go.
Grand Parade is an investment holding company, also empowered, so it gets a bite of empowerment options. It's a market cap of 1.6 billion. For that, you get 25% of SunWest, which is Sun International's Western Cape operations. You get 200 million in cash and investments. You get one of the top 2 limited payout machine operators in South Africa, which is growing. And also you get Burger King, which is a new franchise that just opened. I think management are innovative, the price is good, and there's upside in this.
Do you like Burger King?
I don't like hamburgers, but I think the fast food space is a very strong space. Whether South Africa can do with another competitor, I think it'll be pretty hard. They've got very strong incumbents, famous brands, Steers and McDonald's, which has got a long time period head start on them. But they've got a very strong balance sheet, as Roger says. Nice cash in the bank. There is an option on Burger King doing well, so I think that is an attractive part, and it's got some nice businesses in it.
But the real meat in the hamburger of this particular stock is not the burger business. I mean, that's nice. That's a nice bit of
the gaming business is the meat at the moment,
and also the manufacturing. Don't they manufacture their own machines?
They've
stuff,
just started that. I mean,
they'll export.
Well, I think that's very early days. Yeah. So I haven't really discounted that. The limited payout machines they're rolling out, that they can put together bigger facilities, up to 40 machines now, and those could be very profitable. And there's still quite a lot of costs on all these new enterprises. The expansion of limited payouts, Burger King, there's costs in there which have been expensed, which understate their earnings slightly.
The empowerment credentials, how important are those?
No, those are important for the gambling and the limited payout machines. I think they've got a nice collection of assets which have very good cash flows. That's shown by their strong balance sheet. And there is the optionality of Burger King. It is the least offensive of Roger's.
Oh, he's learning the language, he's learning the lingo, and he's picking on it. So you'll take it then?
I actually quite like this one.
Oh, great. You quite like
it. It's a little bit left field, but yeah, it's interesting.
Okay, yeah, it's a bit left field, he says. That's all right. But that's okay. I've got to pick a winner. And it gets me to a really interesting spot because the brothers have been going at each other for a couple of weeks on this show. Lance Williams from iCapital comes in and he says, I like Invicta, I like Santam, and I like Spar. Roger reluctantly takes on Spar as the least offensive of his stocks. Learning the language of his brother, Lance takes a look at Roger's portfolio of ILIAD, RMB Holdings and Grand Parade Investments and says the least offensive of your picks, big brother. Are you big brother or little brother? It's hard to tell with you Williamses. You are the big. You are the biggest.
They're twins. They're younger twins. Yeah.
Are they twins?
Yes.
Aren't they
Rowan
lovely?
and Lance, yeah.
Oh, isn't that nice? Rowan, of course, was booted out last week. Does Lance have what it takes to boot out big brother Roger? I think it's time for a change. I think, Roger, you should go. So off he goes to go and paint Mum's patio. Mum, of course, is a very proud Sally Williams who's got some serious overachievers in her family. Next time, a battle royal of wits on Tuesday, right here on CNBC Africa. Well done to Lance. That's what happens when you stop taking illegal substances. Your brain kicks into action just like the rest of your bod. That's it. Tell me if I made the right decision tonight. And the Williams brothers, which one impressed you most? Let me know. Tweet me your share shootout suggestions and your thoughts on @BruceBusiness. Until next week, until we continue to pick out winners, shoot out the rest, and have fun at the expense of the Williams family. Till next time, bye-bye.